For those of you just joining us, my name is Dino. I'm one of the market analysts at Santiment, and I'm also joined on this conversation by Maxim Balashevich, who is the CEO and founder of Santiment. Max, want to say a few words for the crowd as they come in?
Oh, welcome everyone. So nice to see you. It's an experiment from our side to try to communicate what can be or how can our metrics be used. Yeah, so please forgive us, experiments if something doesn't go according to plan. But we hope and we believe we'll be able to do our best half an hour.
Yeah, and
thank you for joining. Yeah, I think for some of you could be very early if you're somewhere in the US.
Yes.
Even East Coast could be early. For others like us in Europe, yeah, it's normal time. But yeah, thanks for joining.
Thank you everyone for joining. And by the way, be sure, if you have any questions, be sure to ask in the live chat. We have Gary online in the YouTube chat, and he'll let me know of any questions that you guys have during the presentation so that we can answer them afterwards. So now that we have already a few, over 10 people here, while other people start joining us, I think we can start overall, and then we'll repeat some of the examples if we need at the very end for people if they want to stay a bit more. But let's just jump in. So for all of those joining us right now, once again, hello to everyone and welcome to a very special webinar on how to use sentiments, metrics, and indicators on Bitfinex to become a better trader and to more clearly understand the behavior and the volatility of the crypto markets. So as I mentioned a minute ago, my name is Dino. I'm one of the market analysts in Santiment, and I'm joined today by Maxim Balashevich, who is the founder and CEO of Santiment. So if you're still not too familiar with Santiment, even though I think most of you are currently on a free trial of our premium metrics on Bitfinex, you can check out sentiment.net for more information. Sentiment, what we do is we create custom tools, metrics, and indicators that all have a singular purpose. And that purpose is to add context to the crypto markets and to help you understand the behavior of its major stakeholders. So those stakeholders include a bunch of different market participants. So from the general crypto community or the crowd to active network participants to traders and speculators like yourselves, miners, whales, long-term hodlers, and of course the projects themselves. All of those actors in the market have a push and weight on the market itself. So what we do is we develop tools and metrics and strategies to try and understand the behavior of these actors and how their patterns can impact the movement of the markets and the price action of various coins. So just briefly, what sets Sentiment apart is that we don't really focus all that much on technical analysis. So I know a lot of people, a lot of crypto traders still kind of swear by technical analysis, and many still only just use TA or price-based indicators to kind of try and figure out the market. So the problem with that from our perspective is that technical indicators are mostly, of course, predicated on pricing data. And pricing data in crypto is still very unreliable. So this is still a very, very young market. And like most young markets, it's riddled with price manipulation, with pump and dumps, with wash trading, etc. So all of these manipulation tactics make pricing data less reliable in crypto as an analysis tool. So instead, what we have set out to do at Sentiment and what we've been doing for over 2 years now is we've tried to develop market indicators and metrics that are focusing on more reliable data sets. So at Sentiment, instead of pricing data, what we do is we focus all of our metrics we build all of our metrics by using one of the three data sets, and that is on-chain activity or on-chain data, social data, and development data. And now we have quite a big cluster of metrics that our users use on a daily basis on Sentiment and on Bitfinex to spot tops, to evaluate entry positions, to understand the sentiment of the crowd, and to react accordingly. Also, they use it to analyze a network's health, to understand what major players like whales are doing, and much, much more. So just a quick breakdown. As I mentioned, all of the metrics that you will see today on Bitfinex, all of the sentiment metrics, they draw from three sources. So one is on-chain data. What I mean by that is that at Sentiment, we collect information directly from the blockchains. In most cases, we run our own nodes. So there's no intermediaries, there's no possibility for skewed data. And at the moment, we provide on-chain data for Bitcoin, Ethereum, EOS, Ripple, Litecoin, Bitcoin Cash, and all of the ERC20 projects. We're also in the process of integrating a few other blockchains in the future, but for now, we're pretty much covering all of the top 10 assets and then all of the ERC20 coins in existence from an on-chain perspective. So a lot of the metrics that you will see today, they draw from those on-chain activities of different stakeholders. Now, as far as social data is concerned, you will see some of the social metrics that we have on Bitfinex here under social metrics, as well as you will see for some of the coins a metric called relative social dominance, which is also drawing from the same data set. So we have our own custom data cluster of over 1,000 different crypto-specific social media channels and groups. So we track all of the crypto subreddits. We track hundreds of different crypto Telegram groups, Discord channels, Twitter personalities, some private trader chats, and we compile all of these messages from these channels into charts and into data sets that you can kind of see when a coin is getting talked about more, when it's getting more attention in the crowd, and how that impacts the price of that coin. And finally, the last data set that we cover in our metrics is development activity. So what we do here is we basically look at and track the GitHub repositories of all of the crypto projects in existence that we know of and that have public GitHub repositories. And we try and calculate the development activity of those projects. So why is that important? It's important because the development activity means that projects are starting to invest more and more or less and less into their coding manpower. And by that, you can kind of get a sense of whether they're still working on their project, whether they're trying to push new features, or it's looking more and more like an exit scam that nobody's working on. So those are the three main data sets that we are working on and that we are developing our metrics around. So today what we'll do is we'll show you how to use some of the metrics that we've developed and that you currently should have access on Bitfinex if you're part of our 3-month campaign. And the 5 metrics that we'll focus on today are daily active addresses, and then exchange flow balance, if you want to follow along, tokenage consumed, social volume, and finally, development activity. So we'll show you a bit of everything, some of our on-chain metrics, one of our social metrics, and one of our development metrics, so that you can kind of get a good sense of the different tools and indicators that we use and how you can kind of gauge them to figure out what you want to do with your trades. So before we jump on the first metric and the first example, I just want to let you know that if you have any questions whatsoever, you should be sure to ask us in the chat, or you can join our Discord on santiment.net. There's a link to our Discord right here, and you can join. You can ask us any questions even after the call about our metrics, trading. We talk a lot about just general market conditions and market events on a daily basis. So be sure to join our Discord as well. So I'll leave a link in the YouTube chat for our Discord, but whatever you do, if you have questions, we have Gary online looking at the questions, pouring into YouTube chat that we'll answer after the presentation. So Max, before I start, do you want to say anything else? I've been rambling about 5 minutes now, so feel free to cut me out and
Yeah, first thing, I think we've got feedback that if both of us are talking, there is a terrible echo. So whenever I talk, you switch off your micro, and when I'm talking, you then just switch off.
Okay, there's no echo on my side, but good to know.
Yeah. Also, there was no echo on my side. It's someone from our channel. I asked, can you check out? And they say there is echo. And once I switched off my micros, and became good.
Okay.
Only shortly that we have specific reasons to believe initially in 2016 when I started to build the platform and when people join us to build together why we develop these metrics. It's not that we did not have a kind of framework what we're looking for, and we've been looking for how to build, how to visualize the behavior of specific stakeholders in crypto space. And this is maybe one of the main reasons why price, we use price for visualizing, but you cannot see from price directly who is doing what. Yeah, unless you're insider or you're inside exchange, or have some secret knowledge. For us normal people, if we want to understand who is doing what, then we need to look into on-chain data and social data and start structuring it in one or another way. And when we show on the metrics, it's one way. We have quite a few other angles how we look into stakeholders' behavior. From my perspective, it's the most important part. If we want to be successful trader and investor, we need to understand current state of stakeholders. Are they active? Are they waiting for something? And we need to act accordingly. Yeah, we always take risk, but there should be corresponding reward for us. So we want to know if we move now to the market, there should be enough people who are not there yet, who are resistant to move into the market, so that we have, if market moves in our direction, then we get reward. And if we see, and we will show you today during presentation, based on the metrics, almost everyone is already in the market. Regardless how much I'm tempted, I will not go in, because reward is already small and diminishing. People jump in crypto very fast, and the risk is growing, becoming huge. So this is the reasons behind all these metrics, and a few examples we'll be giving. Good. I think you can start, or you can take over.
Yep. Okay. So what we'll start with is one of our most basic on-chain metrics called daily active addresses. So what you see on daily active addresses graph is the number of unique network addresses that are involved in transactions on a certain date. So essentially what daily active addresses does is it shows you the daily level of on-chain interaction with a certain coin. Now, this sort of interaction can be various. It can mean when you see a spike in daily active addresses, it can mean that there's a spike in speculative activity. If that coin actually has an engaged community, it can also be a spike in utilitarian or just some of the use cases that coin has presented to its community. Maybe there's on-chain voting or some sort of different governance events. But for most coins, still in early 2020, the spikes in daily active addresses, especially when a coin is rallying or when the price is increasing, most of these spikes are spikes in speculative activity. So more traders are paying attention to this coin because the price is rising. Some are trying to dump their bags, others are buying into the pump, as so often happens. So there's several ways that we can use this metric to figure out what is going to happen short term with the price of the coin. And we'll start by showing some of the examples this time for Ethereum first, and we'll then focus on a few other altcoins. So Max, I'll mute myself if you want to show or kind of explain how you see daily active addresses and the recent activity of DAA, or how we call it for short, on Ethereum.
Yeah, good. So just keep the chat. Show your chart. Yeah, exactly. So for Ethereum, and DEA, it reflects the mood, we can say, or excitement of the crowd. Whenever price is growing, so the DEA should keep growing. And for us, it's one of the most stable and kind of valuable indicators when we see, okay, we might be reaching the top, sometimes intermediary, sometimes ultimate top. Now, as we are breaking new highs right now in Ethereum, I think it's a good example for us to make a live application. One thing in the forefront, the last value, like for today, what we have, it's not finished yet calculating. Yeah, it's like being calculated daily active addresses. The number is for the day. Day is not over yet. So you see that on the chart that the line is going down. It does not mean the day is going down. We need to wait till the end of the day. So for today, for Ethereum, at the end of the day, and end of the day, how metrics calculated for us, it's European time. What we want to compare, if we are breaking up, which I believe is happening right now, like 210, 215, or even higher Ethereum, we compare the DA. Has it gone above the level which we get on the 17th of January, where there was a last big top? Can you show on the chart, Dino? No, back, yeah. It's like, yeah, here. So after this, there was a correction. Now, when we build in new highs, the DA should follow. If we don't see this follow through, if we don't see DA going above the level on 70 generally, I would consider if you're long, preparing to leave your longs. Yeah. If, however, the DA spikes and goes above, okay, you can stay in the market. So this is a usage for DA. How to, I personally, I'm looking at it right now as I'm in the market for Ethereum, and it's explanation for it behind will be the crowd should become excited, then the rise is sustainable. If it doesn't get excited, it's not reflected on active interactions going to and from exchange. Well, it's risky. Okay, this usage for Ethereum.
Yeah, so there's several ways that you can kind of look at daily active addresses and what it might mean for the short-term price action. One of the things, as I mentioned already, is that when you see a spike in daily active addresses, especially during an uptrend, usually that's for many like low cap and mid cap coins that can be a telltale sign of a top. So let me show you, for example, what we can see on Aragon on a 6-month view for Aragon's daily active addresses, and how in the past we have seen this sort of what we call a price DAA divergence. So by DAA, I'm just using a short for daily active addresses. So very often we will see these sort of divergences between network activity and price activity. So for example, if we look at the 6-month view for Aragon, I want to focus on this specific sort of chart setup. Let's look at it here. So mid-September, right? So one of the things that we often see is that we see an elevated activity as the price begins to rally, as it has here for Aragon. So the price is in green and then blue is daily active addresses. We see a correlating spike in on-chain activity or network activity as more and more people are trying to take advantage of the rally and join in the money and, in general, try to pump their bags. Now, one of the things that we also see is this sort of divergence between on-chain activity and price, and we often see this as a very bearish indicator for the short-term action of a coin. So here you can see that even though the price is trying to chart new highs, after this very spike on September 19th, the daily active addresses has went from 245 to just 31 the next day. So there was a huge drop in the amount of activity on the network, even though the price was trying to chart the new, to continue the rally. It was unable to sustain itself because there was not enough interest anymore in the coin. People were probably at this point have sold most of their bags and have moved on to other things. So these sort of divergences between price and daily active addresses can very often be telling signs of what is to come for a coin. Max, anything you want to add before I go to another example?
For it's good that you introduce the difference between major coins like Bitcoin, Ethereum, EOS, Bitcoin, Cash, all this, or those who generally have high network activity, on-chain activity, with like Aragon and other examples. For them, the patterns in the crowd behavior is a bit different. We don't even sometimes need to look for divergency, which you were presenting. It's enough to see such a huge spike. Because if you look more deeply into the metrics, you will most likely see it was moved to exchange. And when suddenly many people notice and they move to exchange, what happens next? Okay, all of them dump because it was long time in a kind of struggling mode. So for non-major coins, even huge spike, and by huge I mean like 3 to 5 peaks above an average, like in 80% of cases would mean this is the top. It will not grow anymore.
And this is exactly the other example that I wanted to showcase here. So here we're looking at Kyber Network or KNC. And over the last 3 months, we can see exactly what Max is saying. So pretty much every time that there was a spike in daily active addresses, about 2, 3, 4 times the average activity on the network. So let's say the average activity is about 200 addresses, right? So if we take the mean of these, and then all of a sudden we have this huge spike of 470 addresses, the 3-month high of KNC's network activity right at the very peak. The same sort of pattern repeats itself at this smaller peak here, and then here during this, at the end of this severe rally, before the price starts to consolidate and then eventually retract, we see the same sort of activity on the network starting to rise, and then the spike, the biggest spike in daily active addresses comes right at the top. So as Max is saying, sometimes you don't even need to have to wait for daily active addresses to diverge from the price activity. For a lot of mid cap and low cap coins, just the amount of new addresses and activity on the network is enough to, especially if it's speculators getting into the market trying to dump their bags, it's often enough to lead to an impending price correction. So we'll have more information after the webinar. We'll send you some additional reading materials and use cases for all of the metrics that we've presented, but we just shortly wanted to showcase one of the more common on-chain metrics that we have. And in general, it's good to look at the daily active addresses even on a long-term scale, just like, for example, on a one-year scale, just to see what the activity in the network looks like. If you're doing due diligence on a coin and you want to figure out whether you should invest in it in the first place or not, you probably want to know whether their network is even alive or not. So one of the ways you can do that is by looking at long-term daily active addresses trends. Is the network still growing in terms of its activity? Is it slowing down? How does that, or how will that probably impact the price of the coin long term? So other than a short-term indicator, daily active addresses can be a pretty good long-term indicator just for you to kind of be sure that the coin that you're interested in actually investing in has any sort of activity on the network or any sort of use cases whatsoever that are currently presenting themselves on the chart. So this concludes our daily active addresses presentation for now. The next metric that I want to go over is token age consumed. So what token age consumed does is this is also an on-chain metric. So token age consumed shows the amount of coins that are changing addresses on a certain date, but they're multiplied by the number of blocks created on the blockchain since these coins last moved. So I know that might sound a bit complicated, but it's really not. So basically, what the spikes on this chart means is that we are seeing coins that have not moved for a long time start to suddenly move. This is all that this chart is showing. So we're basically seeing long-term hodlers, maybe people even from the ICO days, suddenly start to move their coins. And very often, so the reason why this metric exists in the first place, or the premise of this metric, is that long-term holders and people that are patient with their money, when they start moving their coins, this is an event that is more important than somebody that has just gotten into money or bought coins 2 weeks ago and has already started selling or moving those coins. So these people usually do these, long-term holders, they do their research, or some of the times they are in the know, or they have insider information on the coin. So once they start moving their bags, it's always an event to pay attention to. So this is not actually an example that I wanted to show, but if you look at it here, we can see this big spike in token age consumed right before the KNC rally recently on a 1 month scale. So somebody has started moving into position, probably maybe.
Can we?
Yeah, sorry.
Dino, can we see if, no, it's a good example. I'm just curious, where did it go, to or from exchange, or irrelevant to exchange? Because if they removed so big amount of tokens from exchange, it could lead to a big rally. Aha, wait.
Yeah, so this spike in token age consumed here, let's see, on the 10th, on the exchange flow balance, we're seeing the outflow of coins. So this is coins being moved away from exchanges on this particular day, Max.
Okay, good. Just keep in mind. Okay.
Yeah, so this could mean that people are removing coins from the supply from the supply and exchanges in order to inflate the value before dumping their bags at the top, which seems to be have happened here. So anyway, token age consumed, the premise of this metric is that people that are holding coins for a long time, once they start moving their coins, it's always something to pay attention to. So we'll start, instead of all of the altcoins that we have shown you so far, let's look at Bitcoin and how its token age consumed looks over the last 6 months. So how do you use token age consumed? Well, token age consumed isn't really a top or a bottom indicator. It can be, or it can be both. Essentially, the spikes in token age consumed depend on the context of the price action that surrounds that spike. Sometimes the tokenage consumed can precede a big dump, or it can precede a big rally. But every time that it happens, it's sort of a big indicator that the volatility or increased volatility is coming to that coin. So if we look at Bitcoin, let's focus on. Okay, so this is almost a 6-month view. I just wanted to include this spike here as well. So let's just look at a few big spikes in tokenage consumed for Bitcoin specifically over the last 6 months or so. So every big spike came at an interesting time in Bitcoin's life or half-life. So here the biggest spike on a 6-month chart came at the very bottom, right before we saw, and so here from 9,500, right before we saw the move to almost 12,000 right here. The next time we saw a similar spike in Bitcoin is here at this interim top before the price started correcting shortly. And then here we see a big spike in tokenage consumed, which led to a price correction. So from 83 to, let's see, where did it end up? It ended up at 79, 88. And so we also saw just recently, if we look at the 1-month chart, we saw the same spike in tokenage consumed right before the bottom. So as I mentioned, anytime that you see, and then a smaller one right here at the interim top. So this is a local one that you don't see on a 6-month scale, but if you just look at the 1 month, this is still a sizable spike in tokenage consumed happening right before the consolidation part begins. So this is what I've been trying to say, is that when you see spikes in tokenage consumed, what you're actually seeing is long-term holders moving their bags to or on off exchanges. You can see that by looking into our exchange flow data. But every time that happens, it's an event that might impact the price of the coin adversely or auspiciously, depending on what the current price of the coin is. So this is the first example that I wanted to show. And then also let's look at Banker as another telltale example of how to use spikes in tokenage consumed to kind of figure out what's next for the coin. By the way, sorry guys if the charts load a bit slow. It might be just on my end because I'm moving them quite a bit. Tokenage consumed. Let's look at the maybe 6-month view. There we go. So the first spike happening right here at the top, and then actually right before the very top, moving the coins, the old coins starting moving. Then here, before this minor correction or consolidation, here at the very bottom, and then if we look at the 3-month scale, we can see that the spike in tokenage consumed came here at the local bottom, and then the biggest spike over the last 3 months came at the very top. So if you saw this on the chart at this point, so let's say you were looking at Banker, you were invested in Banker, and this is what the chart looks like, you would be okay to suspect what you want to do next and maybe get out of the market for a while, because this sort of move, especially when the Banker is actually rallying, might very well mean that people, long-term holders of Banker, are trying to move their bags and take advantage of the rally overall. So this is example number 2, and then let's look at one more, and that's GNT. Now this one, I want to look at the 1-month view, because GNT is kind of different to the spikes that I just showed, in the sense that these spikes happened while the coin was still consolidating. So if we look at the GNT's 1-month chart, or actually let's look at its 3-month chart. Yeah, better the 3-month chart. So we can see pretty much not a lot of tokenage consumed activity during the price decline, but then at these, once the coin started consolidating, we see few big spikes in tokenage consumed before the rally. So very often these can indicate whale positioning, or somebody in the know trying to take advantage of something that they know is going to happen in the future. It could also just mean people moving coins away from exchanges, as Max mentioned, to artificially inflate the price of the coin before moving them back into exchanges. in order to take advantage. But these sort of moves, as I mentioned, are always something to pay attention to, and can in generally mean that higher volatility is coming to this coin than it's currently experiencing. Max, before I move on to our next indicator, anything that you want to add? Let me just mute myself.
Just one thing, how I use, and actually I believe I even wrote an insight on our platform once on it. Coin age consumed is a marker for coming volatility. Yeah, where some metrics or the way you use them predefined to say, okay, most of the time it's an indicator of the top, or most of the time indicator of the bottom. Coin age consumed is a special animal. It works very well, but it gives you one strong signal: volatility is coming. Yeah, something's going to happen. And then what's going to happen, it depends on the context. You first need to understand the whole market situation, then look a little bit deeper into the specific coin you wanna, and you are in a coin, yeah, and you hold it in your portfolio. You really need to do something or do some investigation. Yeah. So yeah, just to sum up, each question is a good metric.
Yep, I think we've got a few questions now for token each consumed, but let's quickly go over the next few metrics just so we can kind of fill the 30-minute slot, and then we'll answer all of the questions in the end. So the next metric on the list is the last one from our on-chain data set that we'll cover today, even though there's a bunch of other on-chain metrics within the Santiment premium package that we're just not going to have time to go over. The last one that I really wanted to look at is our exchange flow data. So this one essentially shows the inflow, the difference between the inflow and outflow of coins to exchange wallets. So we track over 250 different exchange wallet addresses. So we can tell when on-chain people are moving coins towards those exchanges or towards those exchange wallets. So as soon as this chart loads. So exchange flow data basically shows you, okay, on a given day, if you see a spike in exchange flow, that means that more coins have entered exchange wallets than have left, and vice versa. If you see a dump on a coin on a coin's exchange flow data, that means that more coins have left exchanges than have entered. Now, is this just on my part that starting to load a bit slow? Next, we might want you to share your screen at some point if the charts start loading slow on my end, just so you know. Okay, here we go. Okay. So exchange flow balance, as I mentioned, it shows the combined values of tokens moving in and out of exchange wallets over time. So if the value is positive, like here on a certain date, that means that more coins, in this case Banker, more BNT, has entered exchange wallets than have left, and vice versa. If we see a dump like here, that means that more coins have left Bankers or have left exchange wallets, in this case more BNT has left exchange wallets, than have entered. So oftentimes when we see big spikes in exchange flow balances, this can often mean that the speculative activity on the network is about to rise or is rising, and especially when these spikes correlate with the price rally or the price increase, it can often tell us that there's a rising sell pressure, people moving their coins to exchanges to take advantage of the rally, and if the bulls are not able to absorb this sort of behavior, it can often lead to an impending correction. So if we look at, let's say, maybe a 6-month view, or maybe a 3-month view. Let's see what's better. It's a bit, I think, clearly more, it presents more clearly on a 3-month view. So this is sort of the basic behavior that we see very often in terms of exchange flows. So right here, we see a big spike. So the difference between coins that have moved into and out of exchanges is huge here. We see a lot more coins, a lot more BNT entering the exchanges than leaving right before the very top. And then here we see a lot more coins entering a lot more BNT entering exchanges right before this big dip. And then here on the interim top, we see two big exchange spikes. So here, right around the first top, and then while it starts consolidating, we see another one. So typical of the general sort of vibe that we see from this metric is that the spikes in exchange flow balance can very often predicate or precede price corrections if the bulls are not able to take advantage of or absorb this rising sell pressure. You can see here on a smaller scale a similar spike in exchange flow balance right as the coin's price started to rally, and then an impending correction soon thereafter. So this is the first example. Let's look at a few more. Let's look at KNC. By the way, guys, for all of you that have joined us in the meantime, as I mentioned already, welcome. And if you have any questions on anything that you're hearing or seeing on the charts, please let us know. Gary is online or on standby on our YouTube chat looking at the questions, and we'll try to get to all of them at the end of the presentation. So the exchange flow balance for Banker, or sorry, did it go to Banker again? Yeah, I wanted to look at KNC. There we go. So you'll see the same pattern here on the Kyber Networks chart when it comes to exchange flows. So let's look at the 3-month view. Right, so actually, I lied. You'll see two different patterns here. So there's a big dip here in terms of the exchange flow balance, and then a spike at the very top. But I actually wanted to cover this dip here first. Max, do you want to jump in here real quick and explain why we might be seeing this humongous drop in exchange flow balance, meaning that more coins are being withdrawn from exchanges right at the start of the rally than than are going into it?
Yeah, it's like we've seen it quite a few times. Uh, basically, it's a kind of, well, it's not manipulation, but what market makers might be doing, they remove supply from exchanges quite dramatically when they're preparing the pump, so that when it starts growing, it's much easier to move price up. We've seen it quite a few times, and of course, it only works on a relatively small or like Kyber stock. Kyber's not small, but it's compared in Ethereum you cannot do it. It's traded on too many exchanges, but Kyber you can do it. Kyber or any other coins this level, or especially smaller coins. If you know what the good news are coming, and you expect the crowd will start pumping it quite intensively, and it does work. Yeah, it does work. So big exchange outflows, it's a good sign. If you are not in the market, pay attention. Maybe you want to go into it. There is a secondary metric which we don't show here on Bitfinex yet. It's not so simple to show, where we behavior of top token holders. If you see that they've been accumulating before and then they remove supply and someone else removes supply, you can be 90% sure there is a pump in preparation. But at least this metric is already can give you some.
Yep. By the way, we're getting some technical questions. So Max, I'll share this link of ours with Gary just so he can invite Val to answer the questions after the call or after the presentation is done, so that we can provide the best answer possible. Okay, so one other example that I wanted to show for exchange flow data before we move on to social volume is for Augur. So if anybody is invested in Augur, you might be interested in seeing this sort of chart setup given Augur's recent price activity. So Augur actually had a slightly delayed reaction on a 1-month chart when it came to its exchange flow balance. So we'll see, and this is just to show you the nuances between these metrics. So sometimes it's not going to perfectly follow the pattern. However, here you can see on the 1-month chart that there's been a spike in exchange flow, the biggest spike over the last month, but not at the very top. So actually in this case, Augur holders have actually waited a bit before the price started dropping in order to panic sell, basically. So at the very top, we see a decline in the amount of coins going in or out of exchanges. But then as the price starts correcting, the crowd is like, okay, this is not going to end well, so let's move or leave the market while we're up ahead. So it's not always going to be perfectly telegraphed. Not all of the moves are going to happen as the at the very top or at the very bottom. Sometimes you'll have these delayed reactions, which is very normal for for panic selling and just general irrational activity on young markets like ours. Okay, so this is going to conclude the on-chain metrics that we're going to showcase on this at this time. By the way, guys, as I mentioned, we have a lot of more additional metrics from our on-chain data sets, including token circulation, token velocity, percent of token supply on exchanges, MVRV ratio. There's a lot that we haven't gotten into here that we just don't have time at the moment. But if you're interested, we'll be happy to organize follow-up webinars in order to join in on other metrics and explaining a bit more from our premium packages. Okay, so moving on to social volumes. So social volumes, as I mentioned, for those of you that were not here while I was explaining this, so other than on-chain data, we also collect a huge amount of social messages that are related to the crypto market. So we track over 1,000 different crypto-specific social media channels. That means all of the relevant crypto subreddits. That means hundreds of Telegram groups, Discord channels, private trader chats, Twitter personalities, in order to then compile all of these hundreds and thousands of messages that we get on a daily basis and plot them onto a chart and see how the rise or dip in general social chatter and attention for a specific coin impacts or influences the price of that coin in the short term. So the example that I wanted to show here is for Dash. So Dash recently, as you can see, had quite a run. So one of the things that we see, let's focus on the 1 month chart. So here you'll be able to see the last month of social mentions for Dash, and we are in the process of integrating the social volume chart on among our premium metrics as well, so that you can see long or historical data for it as well. So one of the telltale signs of a top that we've seen hundreds of times in the past since we've developed these social metrics is that these extreme spikes in social volume very often correlate, if they happen during a price uptrend, they very often correlate with the top. So the peak hype is when the mainstream audience or the general crypto community is finally starting to pay attention to the coin. So as the hype around the coin peaks, usually it correlates with the peak in the price as well. So we can see here that the on a 1 month scale, the biggest spike in social chatter around Dash. So this chart is showing the amount of mentions of Dash on crypto specific social media channels. So on January 15th, we've seen the biggest spike in Dash chatter with 223 new mentions for the coin. So what happened on January 15th? This is what happened. So it came right at the very tail of the rally before we saw a period of consolidation and then correction for the coin, which is something that we quite often see for altcoins specifically. In terms of Bitcoin and Ethereum, we'll see quite a bit of different spikes and noise on social mention graphs, just because people tend to talk about Bitcoin, Ethereum, EOS, Ripple, whatever, these big coins, regardless of their price action. Sometimes they're just noteworthy. But for mid-cap coins, for low-cap coins, their spikes in social volume are often much more interesting because they usually only come when the price is starting to rally. This is the main time when the general mainstream market community is trying to starting to pay attention to these coins. So the spikes in social chatter for mid and low cap coins usually happens right at the very top. So this is what we're seeing on the Dash chart. And so let's look at a few more examples. By the way, Valentin, our CTO, has joined us for the call. Hey, Valentin, thanks for joining us. We have a few technical questions that it would be good for you to kind of try to answer after the presentation, just so we can provide the best answer possible.
Sure.
Okay, so XLM. Okay, so for XLM, we're seeing a few spikes. So the main spikes that we see are on January 17th and January 20th. So if we compare this to a monthly sort of activity, you can see kind of how it correlates even on these sort of views between, you know, the amount of social mentions and the general price activity. So on January 17th, there was a big spike in stellar mentions, and so January 17th is right here, right before the end of the rally, and then the other spike came right at the very end. So after this initial spike, there was a period of consolidation for a few days, and then on January 20th, we saw another spike in social mentions of stellar before it started dropping again. So once again, the spikes in social mentions and the amount of mentions for a coin correlating with the impending correction for the coin in question. One other example before we move on. Let's look at NEO. Real quick. Okay, so NEO, we see the biggest spike on January 18th. Sorry. Over the last month, we see the biggest spike in NEO mentions on January 18th. So what happened on January 18th for the price of NEO? This is sort of the view that you get. So right before this big red candle on the monthly chart, we see a correlating spike in the amount of mentions of NEO on crypto specific social media. So this is something that we very often see on our own charts and our own tools on sentiment.net as well. So very often we even develop this tool called emerging social trends. If you're interested, this is not yet on Bitfinex, but if you really want to take this concept to the extreme, you can go to app.sentiment.net and you can look at app.sentiment.net/labs/trends. So here, using the same data set, we are calculating the top 10 words that are gaining the most steam on crypto specific social media, so that when coins or coin tickers end up on this list, this is usually going to mean that, especially if this is happening during a rally, this is usually going to be pretty much a death blow for that specific coin's price action. So when a coin's ticker or name ends up on this list, especially during a rally, this is usually what we see right afterwards. And you can even subscribe to a signal of ours. I don't want to go over all of our platform, but you can also get a signal that notifies you when a coin's social volume starts spiking, in order to pay attention to it and then decide what you want to do with it in the future. Max, before I move on to our final metric of the day, do you want to add anything to the social volume charts?
Yeah, and by the way, check messages in our Discord general, since Sanko wrote you something. For the social volume, yes, and the moment when the price, is it now NEO? Yeah, now NEO is growing. What you want to see, and again, you check it at the end of the day or like next day, that the social volume is following up, because what it represents, social volume is, in a sense, is similar to daily active addresses, and we use them in a similar way. It represents the crowd activity, DA crowd activity on on-chain level, and the social volume crowd activity on how the token. We all know that we like token in the channels in crypto, and we track, I think, most of them. Now, if the price tries to keep pushing, but the crowd has already got quiet, not so excited, or moved to something else, the correction or turnaround is just about to happen. So always, I do check it every time. Whenever price making new highs, the first thing I check, okay, is DA making new highs? Is social volume making new highs? And you observe it for 1 or 2 days. It's same animal, but from different angles.
Yep, thanks. Okay, one final metric that I wanted to cover. Sorry guys if I'm going a bit too fast. I'm just trying to get everything in because we did promise that this is going to take about 30 minutes. I know we're already a bit overdue, so hope you're finding this interesting. If not, we will have a recording of everything that we're talking about here. But if you want, join us for a bit 10 more minutes just so we can go over the last metric on our list for today, and that is development activity. So actually, I'll give the floor to Val here because Val, our CTO, is one of the people that have developed this metric, and he'll be able to best describe what we're actually calculating here. So as I mentioned, the three data sets that we use in most of our metrics is on-chain, social, and development activity data. So we have shown you some of our on-chain metrics as well as some of our social media metrics. Now, finally, let's look at our development activity. So Val, do you very briefly want to explain what this does, what this shows, and how we calculate development activity for a project?
Sure. So for development activity, we don't look at number of commits that projects are doing because this metric is very easy to manipulate. And for example, if you fork source code of Bitcoin, your project is going to inherit all the commits from Bitcoin, which is not very fair, and also all the contributors, obviously. So what we do instead, which is much harder to manipulate and also to fake, is looking at GitHub events. GitHub events are generated when developers do different things on the GitHub website. For example, when they push code, this is recorded as an event. When a command is being written on a pull request, this is recorded as an event. When a pull request is being opened or closed, these are different events. So if you decide to fork the source code of Bitcoin, then you're going to generate a single event for that. And then if you don't do any development on top of this, we are not going to record any activity for your project. And generally, it's not possible to retrospectively add events, while for commits, it's possible to push commits in the past with past timestamps to your repository, and this way we can manipulate the history of the source code. So with our approach, it's not possible to tinker with the history of your development activity. Generally, that when we were developing this metric, we saw that it makes much more sense, because in other places where they were counting commits and they rank all the projects by development activity, there were projects on the top that were really not having any development happening on them. They were just forking Bitcoin and putting like a couple of commits on top of that, while projects that been actively developed were much lower in the ranks. With our tracking, what we see is that projects with active development are put on the top, while simple forks that don't do anything are in the bottom. So that's how it works. We have a blog post on the subject on Medium, and you can read more about it there.
Thanks, Val. And so not much to add there, except that I just wanted to show why do we think the development activity matters in general, even though it's not going to be the best short-term indicator, even sometimes not even a long-term indicator. It's good to know how much a project is investing into its coding manpower. And I have a short explanation here that I wrote why we think this matters. It's basically because today, a developer's time is one of the most expensive resources for a lot of these projects. So if a project is investing time and money into development work, it increases the likelihood that the project is serious about pushing new codes, improving its business, and generally serious about materializing its roadmap. And then finally, that it's less likely that the project is an exit scam, because I don't want to show some of the examples here that are going to be pretty much showing the activity, development activity, sort of peaking around the ICO days and then moving into oblivion. Nothing really happening on the project's GitHub repositories anymore. So if you see that sort of a pattern, it could be a red flag for you if if you're looking into getting into a project. If a project is no longer committed to improving the project, do you really want to be involved in it short term or long term? So one of the things that I wanted to showcase is sometimes, Even though I'm not really a proponent of using this as a the single bottom or top indicator or like a general price indicator, we can see sometimes that there are spikes in development activity preceding the price action. And some of the times, for example, like in the case of Dash, we can see that there's been a uptick in development activity in about 2 months before the price action and before Dash started announcing some of the new changes to its platform. So you might want to take a look at it also from a trading perspective, even though it's not probably the indicator that you want to exclusively trust. You might want to look at it and see if there's an elevated activity over the last few months, and then just do your own research and think why that might be. Has the project committed itself to delivering something in Q1 or Q2 of a specific year? Has there been any sort of teasers or announcements or pre-announcements for a specific product, so that you can kind of get into the market if those things end up being true? You can get into the market before the actual announcement and then buy the rumor, sell the news, basically. So this is what we're basically seeing on the Dash chart. I can show you one other example in case of XRP that is similarly has similarly experienced an uptick in development activity over the last few months, kind of coinciding with its rise in price as well. So let's look at Ripple's daily, the development activity. Where are you? You're at the very bottom. And let's look at the 1 year time span. And there you go. So pretty much the same sort of pattern occurring once again. We are seeing a pretty big uptick in Ripple's repositories and the amount of commits and general activity within their GitHub repositories, starting at, let's say, early November, and then going on until almost until late January, and correlating with the price increase of the coin as well. So if you're interested in just generally figuring out how healthy a project looks from a development perspective, and if the project is still committed to pushing code and contributing to its product, this is one of the one of the best indicators that you can look at, even though it's not going to tell you if the price short term is going to bump or down. It's still a very good health indicator, similar to daily active addresses, right? So development activity is basically a proxy from a project's perspective to daily active addresses, whereas daily active addresses shows you the amount of network activity or the amount of activity that network participants are, using, how much network participants are using a specific coin on over a specific time frame. The development activity is showing you the same thing from a project perspective. How much is the project actually using or working on its product and trying to deliver new features to? So this sort of concludes the general overview of the metrics that we wanted to showcase to you guys today. You have today seen 5 different metrics and indicators that we have developed. So we have shown you daily active addresses and how you can use them to spot tops, and how the divergences between price and daily active addresses can be indicative of coins' short-term action. We have then shown you token age consumed and how the spikes in token age consumed, meaning when big or long-term holders start moving their coins, how those actions can impact the price in adverse ways. We have also shown you the exchange flow balance as a metric, and how the spikes or dips in exchange flow balance can indicate either accumulation or dumping periods for a coin. And finally, we have shown you the social mentions of a specific coin and how it correlates on a short-term scale to a coin's price action, and the development activity of a coin and why, or of a project, and why even that can be used as a long-term, price indicator. Although in general, I would just use it as a health indicator of the network in general. So now I will open it up to. Actually, Gary, if you're listening to this call, it might be a good idea for you to jump on a call real quick and give us the questions that we have received over the last 45 minutes, so that we can answer some of them. And so guys, this is going to be a probably 15 or 20-minute discussion on the questions that you have given us. If you have any additional questions, keep them coming. We'll be here as long as we need to. If you need to go, thanks for joining us for this week's webinar. If you're curious about finding more, please feel free to join us on our Discord. So santiment.net is our website. You can slide all the way down on our homepage to click on Discord, and you will join our community gathering place where we talk about trading, daily on-chain social development activity setups, metrics, what they mean about the market, both long-term and short-term, all of the different new metrics that we are developing, different strategies and alphas that we're currently creating based on these concepts that we have developed. All of that can be found on our Discord. I think Gary has joined us. Yep, Gary, thanks for joining us. And if you want, just in like historical order, or just give us the first few questions that we have received so that we can start answering them accordingly.
There was a question about daily active addresses. It was responded. Now, next one is, when you say market makers, are you talking the exchanges or who in relation to exchanges flow balance?
Yeah. Nowadays, I don't think that exchanges are market makers. Yeah, I mean, this is when I mention market makers, I mention teams or close to the teams who also close to exchanges. Yeah, people which business model is trading activity, and yeah, I don't want to tell much more. Let's say it's just one of the key stakeholders who participate in it. So yeah, in some cases exchanges, but in most cases those who are close to them.
By the way, Max, it seems like you're breaking up a little bit, at least on my side. So maybe it's a mic issue, but just so you know.
Okay, no, maybe VPN, yeah, but okay.
Yeah, Gary, want to move on to the next one?
Oh yes. How do you know coin movement is not washing coins through the market? Does it include over-the-counter coins?
So this could be probably a good place for Val to jump in and kind of, Val, if you want to present some of the ways that we're trying to eliminate wash trading by using our metrics and the sort of methodologies that we've developed around that concept.
So can you fill me up on the context around this? I mean, for which metric do we talk here?
Gary?
I guess it's exchanges flow balance.
So for exchange flow balance, the idea is that we look at the amount of tokens that go in, and amount of tokens going out. So if you have a lot of wash trading happening within the exchange, then this is not accounted here. This is only on-chain activity. Now, if you have somebody that is on a single day pushing a lot of tokens to an exchange, then getting them out of the exchange on the same day, and then pushing this money again, because we look at the difference between tokens getting in and tokens getting out, then these are going to cancel out each other. So here what we see is when we look at all the money going in and all the money going out, what is the difference between them? So is there a huge disbalance in the amount of tokens being deposited or tokens being withdrawn?
Thanks, Val. Gary, I mean, guys, if you have any follow-up questions to the things that we are answering at the moment, just let us know in the chat. But in the meantime, Gary, want to move on to the next question that we got?
Social mentions. Is it just retail only, or does it include wholesale? In other words, do we have any wholesale chatter?
Now I want to know what does it mean with a wholesale, maybe like a closed communities, if it means. But in generally, yes, social, we have like a derivative from it, like social dominance. It's taken from the most crowded channels, because what we want to achieve through this metrics measure the activity, yeah, and we have even second derivative, we measure sentiment, what they're saying. That is like the most advanced metrics. So we take the whole crowd as much as we can, from all Telegram, Reddit, Bitcoin Talk, whatever we can get, and we aggregate them, and then we split them. What is the token about? Which tokens? We measure in this way the social attention. Yeah, it's a kind of measurement for social attention. So short answer, yes, it's all about crowd.
Yeah, so unless I'm not sure exactly what the question is referring to in terms of retail and wholesale, but assuming that this means, are we only looking at retail or just general crypto community channels and social media channels, or are we also looking at like professional traders and institutional investors, so the people that are more likely to spend a lot more money on the market? So we don't currently have this sort of differentiation integrated into Bitfinex, but we do actually have it on app.sentiment.net. So for example, on our own platform, you can look at, for example, XRP, right? So you type in XRP and it will show you the amount of mentions of XRP over the last how many months you choose. And you can also distinguish or differentiate between the amount of chatter on different channels that we track. So, if you only want to look at Telegram mentions, you can click here and this is what you'll get. If you want to look at the professional traders chats that we currently cover in our data, you can do so, and you can see, are there differences between the general crypto community's response to the price action and the chatter that is involved or going on into these professional traders chats, and how they are correlating the action of the coin to and what they're doing in relation to it. So that might be an additional explanation to the question. As I mentioned, we don't currently have this sort of... Yeah, go ahead.
When you did presentation, it was good if you could click on the button, because in social trends, select the price of Ripple, because all on top of it, then it's related, and if you there are more hacks what you can do there, but at least make sure that when you measure crowd social activity, you apply it to the appropriate price line.
Yep. I forgot to mention that you can, by default, it plots it against the price of Bitcoin. Although if you actually enter the ticker, it will plot it automatically against the price of that ticker. So here you see the total mentions in green against the price of the coin in gray, and then this is only looking at the Telegram mentions against the price of Ripple, only looking at the mentions within the professional trader chats against the price of Ripple, and so on and so forth. So yes, we do try to include as much data from as many distinct social media sources as possible. However, at the moment, we're only showcasing the total amount of mentions on Bitfinex. In the future, and if there's enough interest in it, we could integrate all of these different differentiations between our social media channels directly into Bitfinex. But for now, if you are super interested into seeing what different sort of social media channels are saying, you can always go to app.sentiment.net/labs or just app.sentiment.net and click on labs and emerging trends, and you can find this data for any word or any phrase whatsoever. Okay, Gary, next question, please.
When centralized exchange data will be picked up in Santiment stats?
So, okay, I guess this might be a question for a while. I'm wondering what specifically the question is referring to in terms of centralized exchange data. Is it just order book data, or something else? Val, your best guess?
So if we talk about tracking centralized exchange specific data, which is, let's say, all the trades that are happening on a given exchange, or what is the depth of the order books. Actually, this is something that we already track for some exchanges. We haven't really exposed it through the API. For example, let's say what is the 5% depth of the order book, which means how much dollars are needed to move the price of Bitcoin 5% up or down at each particular moment, let's say. So we have this data for about 5 of the biggest exchanges. We haven't exposed it through an API, but if you have interest into that, we can talk and we can give you access to that.
Yeah, so for now, as I mentioned, the most of the metrics that we cover and that we have integrated into Bitfinex draw from 3 different sources, them being on-chain, social, and development activity data. But as Val mentioned, if you're interested in specific additional data set that we might have and that we're not currently exposing through our API, ping us on Discord and let's talk. Okay, thanks. Gary, any other questions?
Yes, at the last time of your speech, we received this question from Lush. How do you deal with the discretion involved in interpretation of your data? I'm not sure what data is referred to in this question. Nice to have.
I can answer.
Yeah.
This is it's a very good question, and
Yep.
there is no simple way of saying, okay, this metric, when it reaches this level, I need to buy or I need to sell. It doesn't exist, and it will never exist. By the nature of the things, when we notice something, the context to what we notice is of most importance. And the context includes the price action for the last 2-3 months, or the general social situation we notice on the channels. And this is how we deal. We look at our metrics. All of us who are dealing with this, we have experience with me like 3 or 4 years, some of us maybe a little less, but we know how approximately to bring a context to it. And once we've built the context, me or Dino or Gary, then at some point of time we create an insight, we explain. And I personally believe this is a key point. Metrics or signals we see on metrics, it's only half of the truth. The second half is the context, where we are in the market, where is this token. Yeah, because as I said before, Coinage consumes this is the best example, because sometimes it's very bullish, sometimes it's very bearish. So is it useless? No, it's very useful. You just need to know how to build the context. But for some other metrics, it's a similar case. They're very useful, and the way we deal with it, we try to build as much as possible context, deep and comprehensive one. And this is, in my opinion, the only way how to deal with it. And luckily for us, no machine yet can build this comprehensive context. So we still can beat machines over and over again at the moment. Maybe after a few years, it will be not so easy, but right now it's a good situation.
It's also important to note that we do actively run back tests on our metrics and try to validate our anecdotal use cases and assumptions by running it through, a variety of stringent back tests in order to really make sure that what we're seeing on a daily basis on our charts is actually, validated by strong data. So this is something that is always in the works at Santiment, and we have already if you go to our insights page, you will find a bunch of studies and analyses that we have done using our metrics that are trying to act as support to the arguments that we are presenting today. For example, this article, Price Daily Addresses Divergence, a primer on on-chain trading strategies. So this was written a few months ago by Jan, one of our data scientists. And in this article, Jan is looking at this divergence concept that I have mentioned near the beginning of the talk, where we see the price of a coin rising. And then if we see a divergence between the price and network activity, so for example, the price keeps rising, but the amount of daily active addresses keeps dropping, that if we consider that to be a bearish signal, or we consider that to mean that the activity on the network is slowing down and there's not enough speculative interest in the coin to promote the ongoing uptrend, how does that show itself historically? So one of the things that we've developed is these back tests for the DAA price divergence, and these are the signals that have picked up, that our algorithm has picked up for this specific strategy, where on the red you will see signals that tell you to sell. Essentially, these are the moments when the price is going up but the amount of active addresses is going down, and vice versa. The orange lines are the times that our signal has told you to buy. These are the times where the price is going down but the amount of daily active addresses is trending upwards, meaning that there's more network activity than it used to be, but the price is still not picking up. So it might be a bullish.
Gina, maybe let's not go to many details.
Sure,
yeah,
sure.
Yeah. Just it's very good addition indeed. So there is one, we try to build as much as possible context to when we analyze the market. In the second direction, we apply as much as possible data science, and like we learn on our way to when it can be used, because you cannot use it everywhere.
So I just want to quickly mention here that we also try to help with tools for quantitative analysis, so that you can apply statistics and all these things and do back tests and all that. So in the chat I linked to a Python library that it's open source, and it's a kind of a wrapper around our API, so it allows to fetch these metrics that we're talking about here. And then we are currently also in the process of adding a couple of modules into it that is going to allow you to run very easily backtests for different strategies. So there are two different types of backtests we are concentrating right now. One is about, let's say, trading strategies that are based, let's say, like on momentum. For example, if there is a reversal of the moving averages, then the momentum is picking up, so you need to buy or sell depending on that. So this is one type. And another type is event studies, which is if something specific happens and you want to trade this event, there is a way to write this in Python and validate what are the results. So this is also a way to test different strategies.
Gary, feel free to move on with the next question.
I see some metrics seem to be leading indicators before price action, but how will I know whether such indicators will bring positive or negative impact on price?
Good. This is exactly. These questions are good. So the first step is always to recognize there is a value in the metrics, and the second, okay, how can we use them? Because some of them indeed they are leading, but to do the leading to growth or to decline, context is a key. Yeah, and we will try. We'll really try our best to also formalize a structure the way how you can build a context to it, in which situation could it lead to growth or decline. For the moment, either talk with us directly on bet on Discord, or using the library which Val mentioned. Try to build for yourself some simple or complex Python scripts to find it out. We're working on it. I hope somewhere soon we will be able to also provide more information, not only metrics, but how you build context around it.
Yeah. It's also, there's not a single answer to this, right? But especially for some cases like token age consumed, it can also just depend on the context of the price action rather than just the move itself. So the spike can mean, as Max mentioned, it can be both bearish or bullish, but depending on I would just consult other metrics as well. For example, if I saw a spike in token age consumed this big, I would also look at exchange flow data, and I would say, okay, is there a correlating spike in exchange flows, meaning this amount of coins have moved, but have they moved to exchanges or have they moved from exchanges? These are the sorts of things that you would like to look at additionally in order to add more context to any specific chart or any specific move. So I would say, it's a combination of looking at as many metrics as possible and looking at a trade from as many angles as possible, rather than relying on just one or two of the indicators and saying, okay, this is always going to be my go-to leading or lagging indicator, bullish or bearish signal.
Yeah, just to finish, I realized that we should never forget the reason or why we build this matrix. It is to visualize the behavior of key stakeholders. So when we apply the matrix, we should always keep in mind and learn constantly what can we picture out of the key stakeholders right now. If we see it clearly for us, then we can measure our risk and rewards. If we just try, and it's for humans, it's relatively easy to go direction. Okay, now I rationalize everything, structure everything, metric is metric. No, we should always come back and say, we want to understand the behavior of key stakeholders. Yeah, and if we are able to do it with the metrics, then we can make a good call. If we're still looking at this metric, we are not sure what's going on, don't make any call. Yeah. Spend more time, because experience can be painful in crypto. But once we understand the behavior of key stakeholders, especially where the crowd is it on board? Is it about to be on board? Is it FOMOing, or is it panicking? This is like the most fundamental thing. And in my opinion, if you know this, you're fine for most of the cases. But it can go in deep. So understanding the behavior of key stakeholders is what we want to achieve through using the metrics.
Yep. Good addendum there. So in that case, like on the example of token age consumed, you don't just want to look at the spike. You want to understand what the spike means. So what is the underlying behavior elaborated or described by this chart? It means that long-term holders are moving their coins, right? So this is the baseline from which you start, and then you consult other metrics, both technical and fundamental indicators, in order to expand on that knowledge in cases of, okay, where are these coins likely moving? Are we seeing a correlating spike in social mentions, amount of total daily active addresses? Are we seeing other bearish indicators like an abnormal inflow of coins to the exchanges? What are whales doing? It's a compilation of different factors from different angles, but it's always, the baseline is, all right, what is the behavior on the chart showing us? This is the starting point where you then try and build as much context around it as possible. Gary, you want to move on?
Yes, moving on. Negative exchange flow balance could mean supply reduction, which leads to price rally when manipulation, or less interest in specified token, which leads to price drop. How should I judge which side?
I think
we lost Gary, yeah?
No.
Did you hear the question, Max?
No, I did. Okay. I assumed that he's continuously. Okay. Mm-hmm.
Okay, go ahead, Val.
Yeah, so I just wanted to say about this one that there was this study, I think maybe last year, that showed that increased activity on exchanges, like deposits or withdrawals from exchanges, lead to more volatility on the market. So in order to assess in which direction the price is going to go, you might want to look at some other metrics to decide on the direction, not only on the exchange flow itself. For example, it could be like an MVRV or something like that. But yeah, just my 2 cents.
Yeah, I think that the answer is also kind of tied into the thing that we were just discussing, is adding context from just looking at the general price action of the coin at the moment where you see a big drop or spike in exchange flow balance. And, based on the status quo of the coin's price movement, what this might indicate, but also looking at other metrics and confirming the move to be bearish or bullish based on additional data points and adding more context from other metrics as well. So yeah, I mean, it's never as well mentioned, a lot of these indicators, even though, like, for example, for social volumes, right, we often see this as a very effective and reliable top indicator. But for many of these, it can just be a volatility marker, basically saying, all right, this is a move that is, it's going to add more uncertainty and volatility to this coin's general market movement over the next 5 or 7 days. So it's a combination of both your technical analysis and fundamental indicators. Add as much context as possible to try to make the best decision with the information that you have. So the general idea of all of our metrics is to try and provide you with as much information as possible so that you can make as good of a decision or as a informed decision as you possibly can before, instead of just pretty much guessing altogether where the price is going to go. Oh, sorry, Gary, do you want to move on? Are there any other questions?
I hope Ricky is now happy with our answers. I also hope Valentin will post the link he mentioned in chat again. And looks like that's it.
Okay.
Cool. Then just one thing. If, and I guess there should be follow-up questions. There are two channels. You can ask also in Telegram. For some people, it's easy way to communicate. Even though for us as a team, we mostly spend time in the Discord, and there's where we can run deeper discussions. But pick up any channel if you want get answers to questions you did not ask. Telegram and Discord both works. And to finish on the previous several topics, when I'm thinking about investment style in the crypto, I do believe the key question we should answer each for us: can I measure the risks in a more reliable way, how I could do it 1 week ago? And this is where we try to develop the metrics. And the risk in our case is a top building up, or is there something going on in the background I have no idea about? Because risks, it's a big risk if you don't know what's going on. Because someone could be preparing or the crowd is already mostly in, and just someone told you on a Telegram channel, wow, this is a cool coin. But you can check around, are you the last one or are you the first one to hear about it? So this all things related to risk should be, I believe, our key priorities, because opportunities in crypto, they are coming like every week. But the risks are big, and we can easily, if we don't know how to measure it, we can easily lose 50% in 1 week too. And it's difficult to recover from such loss. So this is, I would say, two major messages: Telegram and Discord, and let's think about how we measure and understand the risk which are in crypto everywhere.
Yeah, thanks, Max. I just, while we're rounding up, I just wanted to thank you all once again very much, especially those that have stayed until the very end and asked us questions. As Max mentioned, Telegram, Discord, even Twitter, whatever you want to engage with us, we're on there. Somebody from the team is on there 24/7. Thank you all once again for joining us. We will be sending you a recording of this stream once it's done editing, and we'll also be in touch via email with additional use cases and educational material, not just for the metrics that we've covered today, but also for others that we didn't have time for. And if you're interested in those additional metrics, let us know on Discord or Telegram that you would like an additional webinar for these metrics, so that we can really dive deep into some very interesting concepts that we didn't have time to explore today, like, for example, MVRV, one of the metrics that we pay a lot of attention to, that's a bit more technical and a bit more difficult to explain, so it would probably need a webinar of its own. So once again, thank you all for joining us, and I hope this has kind of given you a general idea of how you can use these metrics to improve your trading strategies and in general become a more informed, better informed market participant, and as a result, a better informed trader. So for all of you that are currently on a free monthly trial of Santiment's premium metrics, I do hope that you will consider, going one or several months more after your free trial expired. We will have another sort of campaign where we will ask you to give your feedback once your trial is nearing an end, in return giving you an additional several weeks of Santiment metrics, because we really want to know how you have used our metrics. And if you have any sort of experiences so far with the Santiment metrics on Bitfinex, please let us know on Telegram or Discord how you've used them so far. Whether have they helped you in any sort of way with your day-to-day trading activity? Have you made any trades, either buys or sells, based on the data that you have seen? We are very interested in know. And that's why we'll also be prolonging this campaign of Santiment premium metrics for those people that fill out a short feedback form that we'll be sending you near the end of your free trial. So for now, that's going to be it for me. And I would also like to thank Max, Val, and Gary for joining us on this call. And until next time, I'll talk to you via email or hopefully see you on our Discord and Telegram. So thank you all and talk to you soon.
Thanks for joining.
Thank you. Bye.